Burgess and Bolton's weekly wrap-up.
So, hello everybody and welcome to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. And this week we have a special feature, a feature interview with two stalwarts of the industry, if I can say that. So we will we'll have that coming up shortly. But first, as always, we have the news. Ben, I've got a bit of news this week, so let me start. So I saw this. This is the launch of an MGA. It's backed by AXA XL, and it's a parametric policy for cyber insurance. And this is cyber for large companies based in the UK. And the interesting thing I think about this is, firstly, we talked about parametric and we couldn't quite see how it fitted in, once you got out of the very simple kind of, if your plane's late and, you've got a policy for delayed flight cancellation, whatever it is, it just automatically pays out. I can see that, that's fine. But as you get into more complex areas of risk, it's quite difficult to put in those metrics. I think what's interesting about this is that they've got some key bits of data. So they'll look at metrics to do with the ferocity of the attack, whatever it is, and then they're going to look at the impact it's had on the organization's value. And when the two metrics align, then the policy just automatically pays out. So it's an interesting approach. I think I can get it. I'm sure there's a whole lot of wizardry involved in it. And as this article press release says, it's kind of just giving a bit of transparency to customers to know when the policy will pay out and when it won't. I think it'll be interesting to see how it develops, whether they've done their customer research, whether this is what people want, just a large check, or if they're looking for something else in terms of service. But yeah, it was launched this week. So interesting. Cyber as well. It's a growing area.
It is interesting to see these things. They're slightly different from the original parametrics idea, which we always felt, I think both of us felt, it would lack a bit of the service element that you might want to claim for if you're stuck somewhere. So there's sort of limits to it, obviously, and that's perhaps is by design. But is that a product, as you say, that if you were looking at it as a commercial product of the future, are people going to buy that? I mean, is that what they? It is kind of really a fundamental question. Is it? Do you want a kind of indemnity where everything is put back into place and replaced, or do you want some kind of part payment to keep going and feel that life can go on and it's not as bad as it could have been? It may be that. I mean, I have no idea what people want really, but it does feel like indemnity is always very complicated and hard to sell because you have to judge the pricing of that at the time at which the calamity happens and not at the time you buy the policy. Whereas I think if you buy these parametrics, it's probably easier to say if X or Y happens, you'll have this payout. And that's perhaps I think people just go, I might not do that then.
Yeah. I think it was my computer going crazy. Let me just turn all this stuff off.
What's for dinner?
I didn't even know it made that noise.
No.
I might have to edit
it. I've got a new one. It makes more noises than any other computer I've ever had.
God. Yes. Anyway, so but also you've been
I was just going to mention. I think it's worth mentioning. There's a company that does get talked about quite a bit in the market, which is Inigo, which is a Lloyd's syndicate launched 2 years ago. They've just on this, in this, talking about markets and how they're going. They're pretty impressive. They've been approved to grow to $1.2 billion in 2023. So that's effectively year 3 for them. Which is pretty fast growth, I have to say. And they've also amazingly delivered a profit, certainly on the underwriting risk that they've written. So they're 94.4% combined ratio, which is quite good. It might just reflect, well, it won't, it might just reflect the claims situation and so on. But they cover quite a lot of lines, and actually, they've also just been approved to do cyber. And I think they've hired someone from Axis in starting this year. So some of these startups are quite impressively fast growing when you also have some of these very, very large corporations at the top. And I've always said, well, the large ones, scale matters. But yeah, of course it does. But when you look at it, the big ones are looking a bit slow and not very agile compared with some of these.
That is amazing. That growth.
Yeah.
And we're going to talk about talent a lot with Caroline and Helene, but it's a great story, isn't it? To have that, look at these numbers and look at the way we've done it. Come and work for us.
They're very modern. I mean, on the face of it, they're very modern. They talk about being diverse. There's a lot of things. They tick a lot of boxes now. It's very, very early days, obviously, but it is impressive. It is impressive and refreshing. It's nice to see a new breed coming in.
Good stuff. Excellent. Right, let's move on to another bit of news. So this is kind of building up to our kind of talk today with Caroline and Helene. So this is interesting. So these are layoffs in US, mainly, big layoffs over 1,000. And it's a timeline, and basically the headlines are there's a lot of them. There's like huge numbers in here.
Yeah.
And some big some big corporations as well. Walt Disney there, 7,000. So, and it's a mixture between kind of tech and companies that deal in the real world. Let's put it that way. What's interesting is as you get down, so this is just January to March, 10,000 there at Microsoft, lots and lots. But then it also has the numbers for 2022, which are 104,000 US-based company layoffs there. And what's interesting about this is, I think, a number of things. Firstly, on a kind of organizational front, that laying off people is not something that you do lightly. It's a public display of, something has gone wrong, or there's been a change of direction, or something that is not good news. You're looking to save money,
and it's not good for an economy either. So it's cost. It's showing slowing growth.
Yeah,
and it's going to cost the government side of the equation a lot more now. So unless those people get rehired somewhere, but yes, no, I think it is a sign of the uncertainty in the markets, and we've had obviously a banking collapse of the Silicon Valley Bank this week, which has clearly created some ripples, at least through the market. Now, how far those go, but it does look like the market isn't sure what's going to break, where and when at the moment, because there's quite a lot of pressure. So I'd say that these layoffs in these companies, you could say, well, it's just the tech industry slowing down, people, the cost of living. There's more to it than that, I think. I think there's a payment to some extent for what we did with quantitative easing, I guess, going back, and there is, the system has to digest that somehow, and it is doing that, and therefore people are losing their livelihoods, which is awful. Yeah,
it is
a lot of people,
and then also you've got the organizations that you're left with. So the people that are still left in in the companies that have made the layoffs? You know, how do they feel? You've got to now reinvigorate them, get them behind a message. You've got to engage with your shareholders again to reassure them. You know, it's a very kind of costly in more than just.
Interestingly, we're talking most of the time about the talent crunch and the tightness of talent, and there's no doubt there is that, particularly in the UK, and those are mostly American statistics. But and they're falling heavily on the tech sector, as you might expect, but which was probably, I imagine, was overstaffed and was, a bit bloated. But we might, of course, be at the point at which, the tightness basically is presaging a significant decline over a period of time in the economy. And the signs are that is the case, and the world's got to deal with that because there's a lot of pressures, economic pressures all around.
And I think you're right. I think that juxtaposition, good word there.
Yeah.
Between kind of
you use it a lot, though, that juxtaposition. It's become a little recent favourite, hasn't it?
It has. It's what we used to use at university, and I've just resurrected it 30 years later.
There might have to be a band hammer at some point. But, juxtaposition. I think, didn't they say when you use it at university, use it just use it occasionally, don't overuse it.
Oh, okay.
So you said that in itself is a juxtaposition.
It is, yeah.
Anyway, sorry.
But between those figures, and as you were saying, kind of the talent crunch, and perhaps some of those, if we are seeing the similar layoffs in the UK, then some of that talent might make its way to the London market and ease some of that kind of quest for talent.
Get in there, recruit them quick. Get the old LNG and TikTok and everything else in there. Going, come on, laid off at Disney, come and work for AXA XL, Chubb, in you go.
Yep, all of them. So we'll see.
Your cartooning skills here.
yeah.
Or whatever they do in tech companies.
Yeah, indeed.
They still make cartoons at Disney. They do, I think.
Yeah, Disney it's basically a media company, isn't it?
Yeah, I know that. But I'm just saying, do they still make? Is the core business cartoons or
no?
All right. Fine. I haven't looked.
Yeah, I'm pretty sure it's Star Wars or.
I'm a bit sad about
that. Yeah. Anyway, that's another bit of interesting news we thought we would cover, and it leads us nicely into an interview that we had this week with Caroline Bedford and Helene Stanway. They're going to introduce themselves, and we've cut the interview into two halves. So this is the first half of the interview. We talk quite a lot about culture, about the intersection between technology, talent, and culture, and what that means, not only for organisations, but the London market as a whole. So let's run the video, and then we'll come back and say a few words. So this week we're joined by Helene Stanway and Caroline Bedford, who are going to introduce themselves shortly. And we're going to be talking a little bit about tech, a bit about new business models, and quite a lot about talent and culture, I think. But firstly, welcome, Helene and Caroline. Can I ask you to just quickly introduce yourselves, a little bit of history about what you've been doing in the London market, and then we can get on to an interesting chat.
Sure. Lovely to be here. I think this is going to be a really good discussion, even if just the intro was anything to go by. So Helene Stanway, I have been in the market nearly 30 years, principally on the carrier side. And I have transitioned through roles heading up global operations, global innovation and emerging technology. And I've also spent a year working in Lloyd's, in the Future at Lloyd's programme, looking at data. So I have that lovely triangle of operations, technology and data. And now I'm an independent consultant. I'm also a coaching director and non-exec director for Eddie, which Caroline will tell you about.
Thank you, Helene. I absolutely will. I love working with Helene. I'll talk a little bit about how I found her and hooked her into our Eddie ecosystem.
There's no escape.
There is no escape, for sure. I'm Caroline Bedford. I'm the Chief Executive Officer of Eddie, which stands for Educate, Develop, Innovate and Inspire. Hopefully that gives you some idea of what we aim to do. I started in the London market in the late 80s. I walk past Heneage Lane with all the new buildings there, and it gives me memories of my early career and early shoulder pads as well. So I've been focused. I've been really fortunate and had an amazing career in the specialty insurance market over the last 30 plus years, and I've focused on technology. I have worked for software organizations. I've been business analyst, business consultant, program director, program leader. I've done implementations of policy administration systems all over the globe. I was lead underwriting analyst for Markel for a number of years, again, helping lead their global system replacement program. And I've also been part of the senior leadership team at DXC Technology, which is where I created Eddie's flagship program, Digital Minds. I was part of the senior leadership team that helped DXC acquire Exchanging back in the day. And I wanted to create Digital Minds in order to help people understand what Exchanging did through a different lens, and also combine the culture side of the London market with the technological side. That led Digital Minds to grow, and I created an insurtech startup, Eddie, 3 years ago, with the support of DXC, the blessing of DXC, shall we say. Eddie is now in its 3rd year, and I'm really delighted to talk to you about some of the ways we combine technology and culture to help change the market.
That's brilliant. That's a subject that we touch on a lot on this show, and we always try and keep it positive. So perhaps I could start with an opening question of what's the kind of most exciting opportunity or development that you see in the London market at the moment. I'm going to start with Helene, if I could.
I think there is a lot of change and a lot of really exciting projects happening in the market, and I've heard quite a few of them in stealth mode. So I'm going to be really interested to see kind of how these percolate. My bias and my lean is always around real-time data and sensors and IoT. Fabulous to see on LinkedIn this morning, Descartes Underwriting and Provisico partnership. Guess what? IoT parametric. There's an event in the Lloyd's Lab next week, and there are 2 new business models which I am really excited about. And it's something that I have been working on for about 6 years. How do we underwrite commercial property with real-time data and a service proposition? So my little mantra is, it's no longer about the insurance product, it's about the insurance product and it's about its service. And by service, I mean, how do you actually use risk engineering, new sort of data points through IoT to tell you something completely new about your building and do something about it, make it safer, make it better, so that you don't have all of these claims around escape of water, fire, theft, and those 3 being the top 3 causes of loss. The technologies are there. And as Caroline and I have discussed many a time, it's not a technology problem that we have, it's an adoption problem. How do you actually navigate doing something differently? How do you move from underwriting with a handful of data points to multitudes of data points that are coming at you all the time? And we do need new skills and new approaches to try and take the benefit and leverage that really good data insight. So IoT is the short answer.
IoT, I think Helene's got a tattoo of IoT somewhere on her body. That is for sure. And I agree with Helene that there's do you know what? The market is such an exciting place. We often hear people, try to sort of pull it down, but we're all here because we thrive on the relationships, we thrive on helping our clients, we thrive on being those thought leaders and helping create that pathway for the future. And what I'm seeing, which makes me really excited now, is that brokers and carriers are finding their way to help their people move outside of those rigid career paths that they have been in for decades. decades and decades, really. You know, back in the day, let's take an underwriter, sort of linear vertical process. You started off as an underwriting assistant, you then became an assistant underwriter, and underwriter, then class underwriter, etc., etc. And you were very much focused on keeping within those tracks. What we're seeing now is that organizations recognize that those specialist skills need to have more generalist capabilities added to them, because that's what our customers are looking at. That's what in terms of the experience of what we're seeing happening in the world, we need to be able to adapt to change. And I'm really excited that organizations in the market are really starting to wake up to that, and that perpetual learning and continued learning and development has stopped becoming the sort of mediocre theme and vibe that it once had, and is now becoming more sought after. And people are getting more excited about learning these new skills rather than feeling that it's kind of more mandatory and pedestrian.
It was interesting, actually, Caroline. So I sent you a text last night, didn't I? And I said, I've seen this job description, and you're not going to believe the word I saw in the experience and the capabilities. The word was generalist. I couldn't believe it. The first time I've seen a job description with, actually, we want a generalist.
Absolutely. And you know what, we're so pleased about that, because the word generalist historically has felt that you're getting somebody who's got a lot of capability, but they're a bit diluted. It wasn't anything as a positive. And I think that's because the term generalist hasn't been understood. And what that, from our perspective, generalist doesn't mean that you don't have deep expertise somewhere, because of course you do. But what it means is that you have a broad horizontal cross section of skills. You have underwriters, adjusters, actuaries who have got and need deep-seated knowledge of environmental change, social governance, people who have to have a really deep data appreciation, and as Helen will always say, not only understand what data can do, but understand how organizations can interact with it, gain insight from it, and create that feedback loop. You've got what we call people becoming more intrapreneurial within their organizations. So having those entrepreneurial capabilities, but working within an organization and helping them develop. These are the things that we class as generalist skills, which whatever your role in the insurance arena, you're going to need to have these to be able to navigate that change and accelerated pace that is happening now.
So, wow, my head's spinning now, and I thought it would be when you two started talking. Only because there's so many things. I just was thinking, where do I start? So I just started writing down words. So I wrote down one phrase, which was imagining the future, which seems to me to be really behind a lot of what you're talking about, which is you two have a sort of idea, I think, a notion of what this future might look like, which is brilliant, and I think we should talk about that. And the other, I think, which is the contrasting word, is rigid, and breaking out of that. And I would have to say that from my experience in the market, the frustration of it, as much as it's exciting, is the kind of rigidity and the the kind of fixed mindset type thinking. So I just wanted to start there, not for it to be negative, but you're saying it's changing. I'll give my kind of take on it, is that it's changing in part, but there is still an incredible amount of, because culturally, which Jeremy and I have talked about, the culture is hard to shift. Still an incredible amount of that sort of rigid, sort of fixed mindset, very technical kind of approach to everything, which I think means that I experience as, well, that'll be really difficult because, and so I just wanted to see where you kind of think we are. I don't know whether obviously you can't measure it, but your sense of the change, because I believe it's changing too, but it's always a question of quantum, isn't it? Because
I'll
don't want to be here in 10 years saying the same thing.
Well, it's an incremental process.
Yeah.
Any kind of cultural change that's going to stick has to get people on board by choice. And as Helen said, it's always about adoption, and adoption is always about what's in it for me. So we really need to sort of focus on it, all of the stakeholders in that journey, and be able to demonstrate what is in it for them, because they're all going to want something different out of it. We are absolutely sensing and experiencing let's take digital minds, for example, taking insurance practitioners who are outside of the innovation space. So they're, when we always talk about business versus the rest, these are people from the business. And we are getting more and more breadth of role being involved in digital minds, which is almost a year-long program. And we are seeing the range of roles wanting to understand innovation, wanting to understand design thinking, wanting to understand industry themes. So we're seeing more and more people come through our doors, which shows us two things. Number one, there's more appetite for business practitioners to recognize that they need to learn these capabilities. And number two, there are some really forward-thinking learning and development and senior staff within the organizations who are investing in them to learn these skills. And with the way that the talent war is happening, if your company is not investing in you to learn these skills, you're going to vote with your feet. But I was talking about how it's an incremental change and how it isn't going to happen overnight. And that's because the skill and the appetite that we are instilling in people has to be met with a fertile environment for them to be able to continue to develop and make use of these skills. And that's where we're, with Eddie, we're currently at now, because what we don't want to do is buoy people up with great capability that when they complete their Digital Minds program, they go back into a traditional culture that hasn't yet evolved. I kind of parallel it to those years of electric vehicles that were getting better and better, but there was no infrastructure in terms of charging stations, nowhere to be able to drive these things to. So we're really mindful that we are creating some seriously talented, useful and inspirational people, but that the landscape for them to thrive and to use their skills needs to be there too.
So if I'll let Helene come in just for a quick point on that, Karen. So obviously what that makes me think about is lots of these businesses, particularly the larger ones, and the market is consolidating, are pretty much big bureaucracies. They're like institutions, aren't they? So are you really saying that that's the bigger shift in a way, that those cultures have to change and adapt? You can't just change it with changing people's capability.
We saw in the early days, so Digital Minds has been going since 2016-17. And we've adapted and evolved. The Digital Minds under Eddie is same in name only, and culture and values and belief. But in terms of what we deliver, completely different. And in the early days, what we would find are the people who really stood out within the Digital Minds program. So they're people from brokers and carriers who were underwriters, or, got traditional roles. Once they had once they'd learned these skills and techniques of, becoming more innovative, working like a vendor or having an engineering mindset, they ended up leaving their broker or carrier because they found themselves really frustrated and constrained. So they'd come back with new ideas and they were kind of told, well done, but this is what we're doing. So we've seen so many of those now working for insurtechs. They've got that capability and they've had to leave in order to find themselves inspired and listened to back then. We are seeing that change now gradually. We are seeing companies invest in making their underwriters think differently, letting their portfolio analysts see how to, how the benefits of emerging technology combined with environmental change can really impact them. And they want then to create new roles to be able to allow them to bring that benefit back in. That's the change that we're seeing.
I think there's another sort of pincer movement to build on what the previous conversation has been. It's not just about kind of us in our own industry, but it's about how we best service our client base. So we've always been specialists, because we talked about that. So somebody's a specialist in aviation, somebody's a specialist in marine and what have you. But in our complex commercial specialty market, actually there seems to be a lack of that. Maybe it's a kind of a GP type role. So somebody who can see that risk holistically and understands all of the components of risk rather than going straight to, oh, I need this specific type of cover with this specific type of broker.
Yeah.
Because then that means you have a very large organization having to deal with, I don't know, 5 brokers as an example, for 5 different types of components. And guess what? There's going to be gaps in that. So going back to that point of moving from specialist to generalist, I'm seeing it as well from a client lens, that clients want a different type of service. They want somebody who can talk more broadly than just about their specialism, because people need broader risk management advice and capability.
Yeah.
Also, talent war, we don't have enough specialists actually. So you do need to learn. If I was aviation, I now need to know a bit about marine or a bit about property or whatever it is, and build out a more rounded view of.
So are you saying, Helene, that the industry is trying to fit, square pegs into round holes a lot of the time, because you're just taking the product, and if the product doesn't fit with the thing, then that's it? Because I have sat on platforms and talked to risk managers who say every time the people who are assessing my risks, and these are big kind of commercial risks, really do not understand the things that go wrong at a simple level. Because often, I was talking to someone, say, who was running an energy plant, for example, saying the things that go wrong are often really tiny little things that mean the plant has to shut down for a week or whatever. But all the policies are designed for, catastrophes, and then when the little thing goes wrong, there's kind of no, the claims people don't know what to do. There's no kind of setup to help me at that point. Is that what you're talking about? That sort of thing? Is that greater understanding, or is that just going too far?
So I think it's a build on what I was articulating there. That as an individual within our own industry, I think we need to move to not just knowing about one type of business and knowing a broader spectrum, because taking your example of an energy plant, you're going to need all sorts of different property, energy, all sorts of different specialisms to look at it in the round. What I actually am seeing, to perhaps elaborate on your point, is the industry seems to be moving away from the smaller incidents, so that we have an increase in attritional losses that then have to be borne by the client.
Yeah.
And I'm seeing retentions increase and premiums increase, because actually the lower the retention, the industry isn't making as much money as it needs to in order to be profitable.
Yeah.
Which is a balancing act. Okay, that's good for us as an industry. That's perhaps not so good for the client.
Yeah.
So enter my favorite topic, enter IoT.
Yeah.
IoT for me, in large part, in fact, solves for that piece around the smaller things.
Yeah.
Because you can monitor things day in, day out, and you can see the unseen, I call it, because you can see things that are human. Just because somebody goes in on a Tuesday in March with their clipboard or electronic version thereof and says, I spot this, 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 and this.
Yeah.
Well, the Tuesday in April might be very different. And it's still all of those little things. As you continue to observe your risk day in, day out, you can stop the bad stuff from happening if you're monitoring it, which then fits nicely, actually, with perhaps where the industry is going, where we are increasing retentions and we want to cover the bigger stuff, rather than looking at that kind of day-to-day attritional.
And I guess the question there, Helene, is how accurate are they? Because some people will say, yeah, but you still need humans to assess certain things and judgment calls. Yeah. Yeah.
They're not mutually exclusive. Yeah. Not at all. You absolutely need somebody from a human, somebody from a human being. You absolutely need a human being to go around and give that, the sensor will tell you, the sensor will read a whole bunch of data. And yes, you can have an algorithm or a piece of AI that will tell you something about it. But you still need a human to understand which of those data points is meaningful and what's noise.
Yeah.
And how that relates to risk. And it's hugely complementary. I know a stat that on average in commercial property, 1 in 10 buildings gets a physical survey. And we underwrite the property portfolio. So 90% of the risk that we are underwriting, we're a little bit blind on, other than certain risk factors that we get on a spreadsheet.
Yeah.
So it's game changing if we can have something that is 24/7 monitoring across the entire portfolio, if I can say it. And then you send Fred or Stephanie or whomever based on the data. I'm like, oh my goodness, actually, I didn't know that one was quite bad from a data perspective. I've been visiting this one over here. So you can be much more informed in your decisions and add value to your client base.
So it's a really great interview. That's, as I was saying, that is part one of 2-part interview. We'll play the next half next week, but it's really interesting hearing them both talking in such an enthusiastic way about talent and technology and how that impacts culture and what we need to do as an industry and organizations within it in order to get to a better place. It's fascinating stuff.
It is good, and I think it's as you say, it's the energy, and it's the willingness to, I think, go outside of what's normally talked about in insurance. I always say there's a pie chart which is probably financial and rates about 90%, and a tiny little sliver where we talk about people and soft issues, as they call it. So they do that the other way around, and I think that combo between talking about where technology can lift the load and how you can inspire people to be more, I suppose, ultimately flexible and not stuck in these kind of silos and specialist little groups. Not saying that there shouldn't be specialization, but I think it is it's a very convincing argument. I would definitely go along with that. Is that it's partly of its time, because we need that in the industry now. We need less straitjacketing and prescriptive stuff, which a lot of which comes from not from knowledge. It really comes from lack of knowledge and poor data. So
yeah,
I think Caroline's message and Helene's message really is that you don't have to be defeatist about that. You actually say, let's go have the conversation. Let's go into the organization, show them what technology can do, and talk to them about how we can partner and add value. And maybe in the end, all that is about engagement, really, and stop believing that all we are is a machine where we turn the handle and it either comes out as a loss or a profit.
Yeah.
And that's partly how we portray it, or people do. And it frustrates the hell out of me. But so, yeah, very refreshing conversation. And we're definitely going to get them back to talk about some more of that stuff.
Definitely. So thank you, Caroline and Helene. As I say, part 2 next week, where we top off the conversation. So that's good. Right, let's wrap things up. Ben, what are you doing this weekend? Anything good?
Well, it's Mother's Day, isn't it?
Well,
so I've got to do something for that. So that's nice on Sunday.
Are you Irish? I thought you might be. It's St. Patrick's Day, isn't it?
Oh, is it? No, I'm not Irish. No, I'm half Welsh.
Oh, right. Okay. Yeah. I'm not either.
No, is it St. Patrick's Day on Sunday?
On Friday.
Oh, on Friday.
Today.
Right. Yeah. Not that it is today here. But
No.
Yes, I get it. Yeah, okay.
Yeah, I was just wondering. I thought you might go out and get lashed with that.
I like a Guinness. Yes, I would do. I will do then.
Yeah.
I've added it to my plans. Yes.
Excellent.
Drink lots of Guinness tomorrow.
Yeah.
Oh my God.
Good. Excellent. So yes, Mother's Day for me as well. And yeah, apart from that, I don't think I've got a lot on. But FA Cup weekend.
It's been a very busy week. Very busy week. Lots of engagement with lots of people, which has been great. Really good. Really good. It's what you need.
Excellent. Thanks for tuning in, everybody. We will see you next week, and have a good weekend.
Bye, everyone.
Burgess and Bolton's weekly wrap up.